Speaking of high valuations, this article's from April. This stock has been on a tear all year, Palantir. On a fucking tear. The secretive government contracting firm Palantir. Let's see. Look at this chart. Almost 450 billion market cap. Is that right? Let's look at the stock. Market cap 416 billion year to date. 130% year to date. 1 year 304%. 5 year 1,700% over the past 5 years. This stock, Palantir, used to be a $9 stock. It's currently $177. Everybody's getting in here. Why do they say it's overvalued? No one can accuse Palantir, a data analysis outfit and the most seemingly hot stock of 2025. This is only in April. Of one spectacular growth. It reported revenue of $1 billion for the second quarter of this year, 48% higher than the second quarter of 2024, and quadruple the figure in that same period in 2020. Silicon Valley types seek out companies satisfying the rule of 40, meaning the sum of their operating margin and year-on-year sales growth, both expressed in percentage points, is higher than 40%. Their operating margin and their year-on-year sales growth is higher than 40%. So they're growing and they've gotten good margins. Palantir's score on that measure is 94. I'm assuming out of 100. Higher than any other enterprise software firm with equivalent or greater sales. Among the 25 biggest companies in the by market value, of which Palantir is one, only NVIDIA, with its near monopoly on artificial intelligence chip, scores higher. Any investor would want a piece of that. The trouble is that Palantir's market value has soared to 430 billion. So it's actually, this is at the time of this writing, this was higher than it currently is. So it's come down a little bit. It's more than 600 times its past year's earnings and nearly triple the equivalent multiple for Cisco at its peak. Palantir's multiple is at about 120 of underlying sales. For example, in 2005, the year before the Oxford Dictionary added the verb Google, Google's price to earnings ratio peaked at 22. Price to sales ratio. Could Palantir be the best short idea? Writing in late May, he examined the ratio of enterprise value, which adjusts market value to account for the debt and cash on the balance sheet, to forecast sales for the coming year. On this measure, Palantir then scored a 73 and now scores 104. Mr. Parker looked for listed companies that had hit the multiple 70 since 2000. Okay, so it's a little old, but let's just take a look at the stock. What's going on with the stock? Let's look at Google Finance. Yeah, it's been on a tear. 583 PE ratio. A lot of people making money off Palantir. What does the option flow tell us about Palantir? If you don't know, you can follow the option flow to see what some of these bigger institutional investors are doing with the underlying stock. Palantir's options have an implied volatility of 72% with an IV rank of 47%, indicating elevated implied volatility. Current volume is almost 1 million contracts, which is 126% of the average daily volume, suggesting increased option trading. So there's a lot of people trading these options. The overall put call ratio is 0.81, which is considered neutral. In summary, The flow of Palantir data suggests a high level of interest and activity with elevated implied volatility and an increase in both call and open interest. While the overall volume is neutral, the put call open interest is slightly above the 52-week average, indicating a slight bias towards bearish sentiment. However, it's important to consider that analyzing options flow is complex. So can't tell you I know exactly what all of that means, but between the market exuberance, AI, these AI trades, Palantir, investors, more sophisticated investors wanting retail to get access to their funds, I think they're all signals that they're trying to extract more money from you than ever before the AI boom takes over.